Hey everybody, thanks for your interest in my take in the markets. Combining technicals and timing for the win. Here we go. So review of last week. I know my video was more bullish, and the first move down, especially cryptos, was more negative than I originally planned, but I did have a very good read on that on the Tuesday article. So stay in touch with those if you want, my day-to-day updates on the view. And then Wednesday, JPOW was more of a shuffle. I kept to my bullish guns. Thankfully, Thursday, Friday came back, and overall indexes eked out a small gain. Cryptos are off the lows, so not too bad. But I do want to stress I can't predict every bit of economic data. Certainly, relative to expectations is really tough. But once something comes in, I may have a sense of like this timing condition or technical condition, or ideally both is going to hit really hard. Or I'm not 100% on that, but overall take is often good day to day. Okay, and then also some notable calls in Apple and natural gas that worked out well. Miss on AMD, you can look at the review post for more details on those. Okay, so first some charts. This is VIX. VIX really works quite well most of the time. And what I'm pointing out here is that VIX has been above its monthly pivot. So this orange line, I know there's a lot of lines, but I'm used to it. I have pivots, moving averages. I like my setup because it gives me good information. And VIX was above its monthly pivot at least from April 2nd, all the way has been above a pivot until Friday. So VIX was correct in the sense that there was increasing risk, and the high in VIX, then VIX started coming down hard. I thought the daily 200 moving average might be some trouble. It was, but then actually Friday, this is a very significant move in my opinion, because it's below pivots, below moving averages, and we haven't seen that since March. So this could be just the start of a more broadly bullish move. Indexes and cryptos will get going too. And so, yeah, I'm bullish. Question is, how quickly do we turn to power up mode, or is it more kind of tricky sideways creep up mode? That I'm not totally sure on, and it's going to vary, but I have an idea of technically what we're going to see either way. So I want to spell that out a little bit. But keeping an overall bullish, I really don't see a pure rejection and smackdown from these levels, although I think we're at a lot of levels that are going to see some reaction. So, the strength of the depth of a pullback after a rally is also information. So other charts, all the weekly charts, or a lot of the weekly charts, went from 20 MA to 10 MA. Very simple. So here's the orange is the rising 20, and this is rising 10. So it's rising. So it has a better chance of being taken out. But all the other indexes, where NASDAQ is similar, dip below the 20, but right under that 10 MA, which is falling on that one. Dow back above rising 20 at the falling 10. Russell, same thing. We go to daily charts, almost everything's testing those 50 moving averages in purple. But S&P back above all pivots, not quite moving averages, only one more. So, a pure bullish variation would be just it's above that 50 MA from Monday. It doesn't look back. That's possible. Not guaranteed, but possible. It's also possible we have some reaction down as first move, but as long as it holds this monthly pivot, 5084 S&P, bulls definitely get benefit of the doubt. They already earned the benefit of the doubt above all pivots. This is not pure blue sky material yet, which would be once we clear that 50 MA. Cryptos are lagging slightly in the sense that Bitcoin is not above its monthly pivot, and then everything's below these 50 moving averages, have some work to do. But I do think cryptos, I think this low is going to be it. I did think this low was going to be it, but which was for indexes, but cryptos got whacked a little harder on that negative Astro event end of April. But I think that's it. And we still may see some sideways, but ultimately this is going to resolve up. That's my take. And similar on the others. Ethereum is still kind of strangely lagging below monthly pivot, below a sharply falling 50 MA. So more work technically to do. Thanks to the readers suggested that I start including Binance Coin. Without the others, I don't think it goes to power up mode, but it is technically leading above all pivots, above all MAs. Doge getting going, but despite the strength of the rally, percentage terms still under its monthly pivot. 50 MA, watch that. That's turning up. So it'd be interesting if Doge takes off, starts to lead. And Sol, last but not least, also had nice divergence at the lows in terms of reversal bar, still under its monthly pivot and well under 50 moving average. So it's still kind of mixed situation in cryptos, but again, I think they will get going. So that's charts. The other thing I'll point out that I'm including in most of the articles, all about those yields. And I was pointing to this area in the 10-year, many, many days, and did get a sharp reaction down from that ultimately, which paved the way from the stock rally. But this is based on weak jobs data. So the combination of, high inflation and weak jobs data, yeah, it means Fed's not going to hike, but it's not necessarily a good combination depending on how high inflation stays and how bad the job markets get. So still, that's what could limit a pure trend up scenario. But I still think the tech innovators, AI, semiconductors, those are the ones seeing at highs, and those have the best chance of leadership in weeks ahead. And then also the dollar. Falling dollar should help cryptos also. So this, even though we had some chop around this yearly R1 level, a real battle around that right now below. And so risk on scenario gets benefited out, most especially VIX though. And its ETF variations are short term, but interestingly, these confirmed move even before VIX, XVXY, above all pivots, above all moving averages. Before VIX got there on May 2nd, and no concerns whatsoever on SVXY, and similar on VXX, although there is a time bias to those. So it's really VIX is the primary indicator. Okay, so those are some charts. I do want to look at sentiment a little bit. We had a notable, kind of an interesting and development in the sentiment system that I use, and just want to point out how infrequent this is. So this is a certain Bollinger Band moving average setup, and when the lines cross out of the top band and back in, it's excessive fear reducing, and so anything on the top edge of the band and then back in, it means there's been a kind of fear state in the market. And the last ones that we've had, I'm going to get the S&P daily chart up so you can see the importance of this, at least, yeah. So at least the last handful. So this here, October 22, that is the bear market low. The next one was early January 2023, which was, so here we have October 22, the bear market low, January 23. That secondary, higher low, still amazing buying opportunity. And then after that was March 2023. That was the great financial crisis 2023 with the bank failures, et cetera. That was after that, we got a big run. Then the next one, we didn't see one for a long time, August 2023, which wasn't the low, but it was kind of near a pullback low. Then again, we're looking at October 2023, which was the pullback low before a massive rally, and we haven't had one since then. We just had moving averages outside the band and back in just recently, end of April. So this could just be the start of a move to highs or some shuffle, some consolidation, then power up. So just pointing out that all these other line crossings were near major pullback lows, and so we could have just had a major, it's likely, given technicals and timing and the sentiment, that we just had a pretty major low in the market. And so it's just a question of speed, breadth, and force in terms of getting back to those highs and then taking them out. It's question what I'm monitoring from here. So in terms of best moves ahead into the coming week, broadly bullish. I do think we're going to see some shuffle early in the week, especially overnight, Monday into Tuesday, perhaps. Maybe Wednesday starts higher fades, things like this. But another strong end of the week is likely. What I really want to see is the leadership, including cryptos, broaden out, and semiconductors are getting gear. Like Nvidia has room to move up. And just as they've been the leading sector and had a pullback. Yeah, and there are several semiconductors look ready to launch, and Nvidia could be back, in the high, above in the 900s in a hurry, and then people will be thinking about the highs, and then people, 985 to 1000 area. So I would like to see semis leading, cryptos playing catch up, and other large popular tech stocks getting gear. That said, I don't think it's going to be power up week. I still think there's going to be some shuffle. We're watching for the reaction against those 50 MAs. I know there's those gaps. I don't think we'll have a full gap fill, but in any case, broadly bullish, expecting some stutter steps. Cryptos will get in gear eventually, at some point, but they're not leading right now. And what I want also to see is the leadership broaden out. There's plenty of room for more new highs. This is a chart of a simple 10 MA on the new highs in the New York Stock Exchange. So look at this, down near the lows. So plenty of room for this to move up. And I do like watching the new high, all-time high list, Finviz, TradingView, whatever source you want. So that is my quick take on the week. And so now I'm going to look at some data edges. I'm talking about these. These are some of the simplest and best. So this one is, so I'm going to explain this. I already tweeted about it, and I'm going to just put it on video for those who are watching. And I might do a long event to really describe some Bitcoin edges in the near future. And if you're interested in that, let me know. That would actually be a paid event, not free, but I really go into detail on some of the best and simplest edges, cryptos. And so what this chart is doing, so for those either new to my work or saw the charts on X or Twitter but not fully getting it, I have 15-minute bar data, and that data is measured in average 15-minute % return. It's not total return, it's not sum, it's just every 15-minute bar has a return. I'm doing % on that, and then using Tableau, I'm averaging that out. And I can select different date periods and different market environments. So right now it's got all selected, but I also think it's very important to look at both bull and bear market data, because the timing really works differently often in many studies, separating out bull and bear environments. So because we're in a bull environment, I'm going to select for bull on this. And this is the total data, but I'm keeping to April 2020 to current is the selection here. And what this shows is the moon waning, which is half the time, is about 3 times greater than the waxing. So they're both positive. So it's not necessarily assured, but waning means on average over the last 4 years, you're getting like 3 times the gains. And then different data time periods will have slightly different results. And interesting, so that was 2020 to current, just kind of the start of the decade without the COVID outlier. The last major bear market low, look at this, November 22 to current. In bull markets only, 0.006. I know it's not a small number, but it's really the differential. This is 10x, amazing edge. And then working, so narrowed down even further, just more recently, September 2023 to current. So really the last few months still going strong. Also 10x, see 0.008, and this is 0.008, so 10x in the waning phase. And then this year alone is actually negative in the waxing phase and positive, significantly positive in the waning phase. So that's the data on that. And this chart, the one on my Tableau Public page, this is the same thing that I just showed on the price chart. So let's see, I should be able to get both of these screens going. So we can see like the orange is the negative sideways. Here's another negative one. I'll have to expand this out a little bit. Okay, I'm gonna move this one. Okay, thank you. Thank you for your patience. Okay, so here we go. This pink is the waning, so up, 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 and then the current one had a pullback, but starting to come back to even through yesterday. Whoops, there's another one that was about even, and then the current one almost even, not quite, but a few days left, and then orange has been the drop. So this is what's happening in the price chart. This is the data for this year. So I wanted to explain that. And then on the ES level, it's a little more sensitive to the actual quarters. And fourth quarter has been the strongest by far, but again, very consistently. And so that's been in play from Wednesday of last week through Tuesday. So both of them are getting benefited out, although it doesn't mean I'm expecting Monday power up, Tuesday power up. It's just that data edge is in play through Tuesday, and I think it will deliver overall, still expecting, given the technicals and other factors, perhaps some shuffle. And then for the people who are index traders, I do have a similar page on my Tableau Public here for the cryptos, for indexes. And it just looks a little choppy because the weekend data skips over. So, but it is the same information, just broken out by quarter instead of the waxing waning phase if you're trading indexes. So with that, I'm going to check out, see how the Globex Open is doing. Thank you very much and good luck.